Hey guys, and welcome to the Trader's Apprentice blog, episode 10, Sentiment Scan. Now, I was sitting at home on hot and humid Monday night here in Brisbane, and I was doing my sentiment scan. I thought to myself, let's share this with the group. I think it's quite important. I know I only did a video last week, and I generally try to do them every 2 weeks. I guess here's a little bonus one for you. It should be short and sharp, but let's get into it. So, sentiment scan. Let's talk about the what, the why, the when, and how. So, what? Well, Investopia describes market sentiment as the overall attitude of investors towards a particular security or financial market. Market sentiment is the feeling or tone of a market, or its crowd psychology, as revealed through the activity and price movements of the securities traded in that very market. In broadest terms, rising prices would indicate bullish market sentiment, while falling prices would indicate bearish market sentiment. Why? Why do we want to know it? Successfully recognizing and evaluating market sentiment before making investment or trading decisions may allow investors or traders to objectively take a step back and evaluate an asset on its fundamental merits, as well as identify how the crowd is positioned and at what stage of the market sentiment cycle are we in. When? Well, that's totally up to you, but I try to do a sentiment scan at least monthly, probably more likely 3 weeks between scans. How? Well, I take a big step back, right back, and I look at the charts on the weekly time scale. You would even consider using a monthly scale for stocks, as they have far more history to use. Now, I use clean charts, so if you can, have your charts with your day-to-day technical analysis, your trend lines, your channels, everything else. But for your sentiment scan, I think it's important to have a nice clean chart and take a big view picture of the market. I try to concentrate on the top 10, that's in market cap, so you can go to coin market cap to get that information. I'm not sure if mine's up to date. I have to check that actually. I think a few of them have moved around a little bit, but that's not important for this video. And then after that, I would peruse a few of the altcoins, probably some of the more renowned or followed altcoins. Sorry. What do I do? Okay, so I focus on price action, obviously overall trend, highs and lows, and chart patterns. I focus on the averages. Are they fanning or are they contracting? Are they rising or are they starting to flatten out? And what is the angle or the slope of the averages? I focus on the MACD, yes, for divergence or convergence, but more so as a momentum indicator at this time frames. Remember, we're at the weekly, okay? RSI, this is where you can use the RSI for trend, and that's where it's greater than 50 is a strong trend. Sorry about the spelling error there, I just noticed. And less than 50 is weak, and you'll see that on the charts I'm about to show you. Volume action compared to trend. And now that's a little bit more on the Dow theory, which we can continue to touch on as we go through. Now, I know in the last video I talked about following the indices, making sure you're trading with indices, checking indices against the overall indices or your market segment or section indices. This again is I guess another step back, and it's really big picture. Where are we in this market cycle? How is the psychology? And it really filters out a lot of the noise and garbage you'll see on social media, on Twitter, and all those other things. And you'll see in Discord that quite often I will try and tell people to not think about the noise too much. All that information is playing out in real time on the charts. So let's run through some charts now and we'll do a sentiment scan. Okay, so I've got Bitcoin here, and this is I guess why I left this chart here is on the weekly time scale, it can really highlight some significant support and resistance levels that are very critical and very important. Okay, but for the purposes of this, let's go to the top 10 and we'll go to a nice clean Bitcoin chart. Okay, so here's a very, very clean Bitcoin chart. I've got myself a note here. I was obviously supposed to tell you something. So the note is we're not using indicators as trading tools at this high time scale. Now that's obviously unless you are a very long-term player or investor. Remember that they are lagging indicators, and this is the weekly time scale. So they're significantly lagging. But what they do is they paint a very, very important picture for us. So I can get rid of that note now. I've reminded myself that. And we'll have a look at Bitcoin, or Bitcoin as people are starting to call it in the group. Now what can we see here? Well, first of all, we can see the massive run up to all-time highs and the succession of downtrend that has been 2018. Now going back through our list, what are we looking for? Well, we're looking for price action. What's price action? That's identifying trend, a series of lower highs and lower lows, and then you see it starting to flatten out with a fairly large support with still lower lows heading into that support. We're obviously looking for chart patterns, and we're looking at what that price action is telling us. And quite frankly, you can see the euphoric rise up to all-time highs, and you can see the long-term bear market that we have had this year. Now, the next part is the averages. And now, what I'm talking about fanning and contracting is you'll see at the start of the run-up, the averages start fanning apart, or the averages are actually diverging away from each other. Now, if you see that on a weekly time scale, when you go down to the daily, 4-hourly, or the 8-hourly where you're trading, you can be quite confident that that trend will maintain itself until it starts to contract or converge back together. And you can see that throughout the bull run, the moving averages continue to essentially, apart from a couple of retraces, fan out all the way. And as you can see from all-time high, these averages are still fanning out, which is pretty simply why most people don't and shouldn't trade on averages crossing. Now what you see on the downside of thing is, again, we see the averages cross and they are fanning out. So if you're looking through May, June, July, and you're thinking you want to take a long position, you want to be very careful. As you can see, the averages are fanning out, coming down through this downtrend. Not only that, you've got the price action telling you the same. So if you're going long in these periods, you want to make sure it's a day trade or short-term trade. Now what you also see here now with Bitcoin is that the averages are very steep, running up to that euphoric rise. And as they're coming down now, I guess, into the last month or so, they're really starting to flatten out. Now, that's not to say that they can't turn and continue to downtrend, but that is telling us that that downward movement or downward momentum is starting to slow up. That's really it. You know, you can take from that what you will. I don't want to try and make any presumptions, but it would appear as though the market is starting to flatten out. Now, the MACD. Okay, so we can see quite clearly that from this second low to the third low, there is definitely divergence. And then from the third low to the fourth low, again, the last couple we can't really count because they're actually a little bit higher each time. So the price is converging or contracting there a little bit, right? But what we can tell with this MACD is that if you look at the run up, we have positive above the zero line momentum, increasing all the way up to the very top. And then we have the opposite for the whole downtrend. But what you notice as price continues to fall, the momentum is starting to dry up. And in fact, if you look in very closely, the last couple of weeks it's actually looked positive, even though the price is in a sideways range at the moment. Again, you can't infer too much from this. Things could change very quickly. But what this is telling you is that the momentum to the downside has been drying up over the last couple of months. Now we move on to the RSI. And this is a perfect example on a longer or higher time scale of strong relative strength and weak relative strength. So if I grab my mouse here, and I grab my crosshairs and I put it right on 50, or as close as I can get, you'll see very clearly that for the entire run up to all-time highs, the RSI did not at any point dip below 50. Now, again, it's a lagging indicator, as are all the others, but then you can see from the downtrend or the bearish trend we've had for the remainder of the year, for the entire time we've been in a downtrend, the RSI has been essentially below 50, plus or minus a couple of points there, okay? These are very strong indicators at this time frame to show you or paint a picture for sentiment, right? Now, lastly, we'll touch on the Dow theory and Mr. Dow. What Mr. Dow tells you is that for an uptrend, you should see increasing volume, okay? But when the price is in a downtrend, you should see decreasing volume. What you notice here at the top, though, is as the price hits all-time highs and starts decreasing, the average volume is still rising. That's what Dow calls volume divergence. Okay, they're moving away from each other. The price is coming down, the volume is still increasing. That's a bad sign. That's one of Dow's indicators of price of trend changing, which is quite clearly evident, right? On the same token, we have a downtrend with volume coming down. If the price continues to dip a little bit and this volume starts to pick up, that again is price divergence, and Dow explains that is another signal of sentiment and or potential trend changing. Something to keep an eye on, and that's from the early 1900s, late 1800s Dow theory. Okay, now so let's go through the top 10 and have a look at what we see. We've got Bitcoin there, which we've explained quite well, and you'll probably see that the remainder of the top 10, because they drive the market, they have the bulk of the market cap, are looking very much the same. You're looking for anything unusual or anything different, and you can see that Ripple, for example, the moving averages are starting to come together closer. They're diverging together. We've got a bit of a volume rise, and we've got some positive momentum, and RSI is starting to pick up. It's not a bad sign for all the lovers of Ripple there, but I don't think we're going to see 589 by end of year. I think that was it, wasn't it? 589's been getting around a bit. Litecoin, much the same, if not probably a little bit worse. These averages are still fanning out. There's still negative momentum, and relative strength is very low still. So I wouldn't be looking to go long anytime soon for a major play on Litecoin. And then we can flick through the remainder of the top 10 and see pretty much the same thing right throughout. Now, obviously, this is a classic example of not having enough data on the charts. And if you go to a stock, for example, that's, I guess, a reason why you can step out to the monthly timeframes. Okay, just to finish off, I think I'll grab a altcoin or two and show you something that I have found with a couple of them. So I've got IOTA here. What I've found here with IOTA, whilst we're still looking fairly negative in the indicators, these averages are really starting again to flatten out. And I think Zcash is another good example. These averages are from a very steep slope here. They're really starting to flatten out. Now, I'm not saying that the market is going to turn around anytime soon. They could stay flat for a very long time, as Bitcoin saw, I think, in 2013. But what I'm trying to get across to you guys is that it's really important to take a big step back and have a look at overall market sentiment. You're not going to take long positions when you're seeing weekly averages fanning apart like this. It's just ludicrous. So I hope that really helps you guys out. Just another, brainstorm I had when I was sitting here Monday night doing my monthly scan. I thought this is something that I think a lot of guys in the group will get a lot of information, or a lot of knowledge from, I guess. And that's why I'm here. So please feel free to hit me up in Discord to ask any questions as usual. And lastly, if anyone ever feels like it, I'll put my addresses in the comments, and one day I might get a tip or two. We'll see how we go. But anyway, as usual, a bit of feedback in Discord, some appreciation for the videos, and any questions, just hit me up or send me a private message. I'm happy to answer it. Anyway, guys, that's pretty much it. Nice, short, sharp one for this week. And next time, I believe I'm going to start looking at an introduction to candles. So thank you very much. I'll wait for the motorbike to go past, and I'll sign off. Thanks, guys. See you next time.